Hi viewers, 5 minutes to plan for next 5 days. Well, the week that was chose to tread along the technical analyst's view and meet resistance at 11,300, the Nifty, and the week ended with the equity markets registering some minor losses. But the caution needs to stem from the gains being posted by the small cap and mid cap stocks. More than around 40 stocks have gained, and therefore it might be worthwhile to go back to last week's reference about the need for caution when taking blind bets on sectors. Cement was mentioned as a sector where uniformly the stocks have maintained momentum. But last 2 weeks, if you observe the movement of Shree Cements, it has not been able to maintain the momentum and in fact has lost out a bit. This week, another core sector that has performed very well is steel. Beginning from Steel Authority of India Limited, SAIL, which has gained nearly 100% since April. Last week we saw very handsome rallies in Tata Steel and JSW Steel. In fact, Friday JSW was the top gainer, more than 2%. And since April, both these stocks have gained nearly 60%. So, the point we need to be asking ourselves is this concomitant revival or gain being posted in core sectors, steel and cement, a reflection of revival or rebound of physical activity? Well, I would suggest that we need to get this validated with data from the ground regarding movement of physical goods, raw materials and the like. However, generally there has been a cursory dismissal of the hospitality sector as the most negatively affected during this phase. But for example, I am saying Lemon Tree, Indian Hotel, etc. have gained, whereas Oberoi's EIH has been a laggard. And a similar dichotomy you will see in the movement of Apollo Hospitals, which has been consistently gaining, whereas a stock like Aster DM Healthcare, though it has gained from April, last week of course the quarterly result numbers were also not encouraging, but the stock lost out. So let us give more respect to the technical resistance of 11,300 before initiating a fresh move would be my suggestion. The important data during the week was the inflation for the month. The number came at 6.93%, a huge jump from 6.23 during the previous month. And immediately this negativity was reflected in Friday's 10-year benchmark debt auction program of Government of India, where more than 25% of the notified amount devolved on the primary dealers. And the market took a cue and the yields hardened. Resultantly, you would have seen the debt mutual fund NAVs have suffered some erosion. Therefore, again reinforcing what was observed during the last week, this presentation I am saying. For those who have stayed invested in a debt mutual fund fairly longer back, period of time back, it might be worthwhile to consider booking profits. In the commodities segment, gold on expected lines met the retracement at 2,100 a dollar and came back to 1860, and slowly it again regained, but definitely not back to 2,100. So this can be taken as a short-term resistance. The week ahead, we have the FOMC minutes in US, which may not give much alarms because the long-term view is for stable interest rates there closer to zero. And the housing starts data is there on Tuesday, which could again give some indication about the growth prospects or how resilient is the US economy. As expected, dollar rupee was in 74.75, closer to or less than 75, and RBI was also seen in the market. Therefore, next week ahead, we may again see a range-bound movement for rupee against the dollar between say 74.70 to say 74.90. Anyway, have a very fruitful and interesting week ahead.